What if I told you that buying a 15-year-old condo in Ashoka today gives you a better return than the newest skyscraper launching Perform? Sounds crazy, right? But that's exactly what the savviest investors in Bangkok are doing in 2025. They're not chasing glassy renderings or queuing up for launch day promotions. They're running the numbers, and the numbers tell a different story. Bangkok's resale condo market, especially in the CBD and Riverside zones, is delivering superior yield, faster income, and less risk than most off-plan or pre-sale projects. In this episode, we're going to dissect why. Why is the price gap between new launches and resale now pushing 70% in some districts? Why are investors getting 6 to 9% yields from units built in the 2000s, while ultra-luxury new builds barely deliver 3%? Why is 2025 to 2026 the sweet spot for accumulating real value, while others are overpaying for delay and hype? Whether you're an expat, a Thai investor, or watching from overseas, this is your roadmap to investing smart in Bangkok real estate this cycle. Let's get into it.
Let's talk about the elephant in the Bangkok skyline, the massive pricing gap between pre-sale condos and resale units. Right now, the average price per square foot for a new condo launch in the CBD is hovering around 315,000 baht. But what are resale condos in those same neighborhoods trading for? Try 141,527 baht. That's less than half. In fact, if you look at Riverside properties, it gets even wilder. Some resale units in buildings like Watermark or the River are going for 100,000 to 160,000 baht per square meter, while new Riverside launches ask for double, sometimes more. And it's not because the new units are twice as livable. The build costs, land prices, and branding premiums are inflating new launch pricing, but rental income hasn't doubled to match it. What we're seeing in 2025 is what I call the Great Divergence. Developers are stuck pricing new stock at luxury levels, even if the market doesn't want it. Meanwhile, resale buyers are getting better units in better locations at 2015-era pricing, sometimes with stronger floor plans and views. That's why experienced investors are jumping ship from pre-sale altogether. They're focused on visible, rentable, cash flow ready resale condos. Because when price per square meter starts climbing past 300K, but your rental income doesn't, you're just paying for hype.
Now, let's dig into the heart of the matter. Why resale condos are absolutely dominating Bangkok's investment landscape in 2025 and 2026. First reason, pricing efficiency. New launches are coming out at 250 to 350,000 baht per square meter, with some luxury towers pushing over 400,000 baht. But resale units in the same CBD zones are closing at around 141,527 baht per square meter. That's a built-in discount that no developer today can match because their land and construction costs are locked at 2025 levels. Meanwhile, resale units were built when costs were half, sometimes a third of today's costs. Second reason, rental performance. A resale condo bought at 10 million baht can rent for 40 to 50,000 baht a month, delivering yields in the 4 to 6% range and even higher after renovation. Meanwhile, a brand new 20 million ultra-luxury shoebox rented for 50,000 baht puts you at around 3% gross yield, and that's before vacancies and fees. Third, immediate income. Resale and RTM units start generating cash flow from day one. Pre-sales, you're waiting 2 to 4 years just to collect your first baht of rent, assuming there are no construction delays, which have become pretty common since 2023. Fourth, risk control. When you buy resale, you're buying something you can walk into, touch, inspect, check the view, check the airflow. You know exactly what you're buying.
Off-plan units, you're buying promise, not product. Fifth, size and livability. Developers today shrink units to hit price points. A modern 2-bedroom is 48 to 55 square meter. A resale 2-bedroom from the 2000s is 80 to 110 square meter, sometimes even bigger. Tenants feel that difference immediately, and they're willing to pay for space. So when you combine lower entry price, higher yield, instant cash flow, reduced risk, and better layouts, the conclusion is obvious. In 2025-2026, the resale market isn't just competitive, it's unbeatable for serious property investors.
Now, let's zoom into the two most important battlegrounds for smart condo investing in Bangkok, Sukhumvit and the Chao-Phraya Riverside. These zones are the heartbeat of expat demand, corporate housing, and long-term capital preservation. And in 2025-2026, both markets are telling a very clear story. Resale is massively undervalued. Let's start with Sukhumvit, from Asok Ditong Law, the rental engine of Bangkok. New projects here are pushing 250,000 to 350,000 per square meter, sometimes even more. But the resale market, you're seeing strong buildings trading at just 80,000 to 150,000 per square meter. Think about that. Same location, same BTS access, same expat demand, but resale costs 40 to 60% less. And the difference isn't just price, it's livability. New 2-bedroom units in 2025 are tiny, 45 to 55 square meters. You can barely fit a sofa and a dining table. Meanwhile, older Sukhumvit condos, the ones built between 2000 and 2010, offer rating to 120 SM for a 2-bedroom. Real kitchens, real balconies, storage, sometimes even maid rooms. And that's exactly what Japanese tenants, European families, and digital nomads want today. Let's shift to the Riverside, where the gap gets even crazier. New Riverside luxury projects are asking 300,000 to 500,000 per square meter, ultra-luxury pricing. But legacy Riverside icons like the River are transacting at 166,000 to 215,000 per square meter. And Watermark's Chao-Phraya goes even lower, 100,000 to 137,000 per square meter. That's literally less than half the price of new launches with the same river views, bigger layouts, and facilities that are still competitive today. And if you want the middle ground, Super Light River Grande gives you modern facilities at 90,000 to 125,000 per square meter, priced like a 15-year-old building, because it's on Rama 3. These riverside assets are massively mispriced relative to land scarcity. And with the Gold Line monorail linking iconic Siam to the BTS network, rental demand on the Thornbury side is rising fast. The bottom line, Sukhumvit gives you rental efficiency. Riverside gives you capital preservation and deep discount to replacement cost. And in both markets, resale is not just good value, it is the strategic advantage for investors in 2025-2026.
Now let's talk about one of the highest offer strategies in Bangkok real estate today, the Buy-to-Renovate playbook. This strategy exists for one reason. The pricing gap between old bones and new launches has become so wide that renovation creates instant value. Here's the basic math. You can buy an older CBD condo, let's say in Asok, Phrampong, or Tonglo, for around 80,000 to 120,000 baht per square meter. These are big units, 80 to 150 square meters, real kitchens, storage, airflow to wax. Then you renovate it. A full luxury renovation in 2025 costs roughly 30 to 50,000 baht per square meter. So even if you buy at 80K and renovate at 40K, your total cost basis is around 120,000 baht per square meter, maybe 130,000 max.
Compare that to new launches in the exact same neighborhoods, starting at 250,000 baht, it often hitting 350,000 baht per square meter. You're literally getting the same functional value, often better layouts, for half the price. And here's the kicker. Tenants love renovated older units. 100 square meter renovated 2-bedroom rents faster and at a higher rate than a brand new 50 square meter unit in a shiny tower. Why? Because people want space, especially expats with families, remote workers, or couples that want an office. Let's run a real example. You find a 100 square meter older unit for 8 million baht. You put 3 million into the renovation for kitchen, bathrooms, and flooring, lighting, built-ins, transfer miscellaneous fees, just a rounded error with today's government incentives. So your all-in cost is around 11.3 million baht, or 113,000 baht per square meter. A comparable new unit with similar usable space and quality, easily 25 million baht, maybe more. That's the 100% value unlock simply from using a strategy the average buyer overlooks. And the rental? That renovated 100 square meter unit can bring in 45 to 55,000 baht a month depending on the building. At an 11.3 million baht basis, that's a 5 to 6% gross yield in a prime location with virtually zero vacancy. Now, the buy-to-renovate strategy does require real due diligence. Older buildings may need upgraded electrical load, new piping, or updated ventilation. Some 90s buildings require asbestos checks. But if you pick the right building, manage the rental properly, and control your budget, the returns are unmatched in the Bangkok condo market today. This is why serious investors, especially repeat buyers, are actively hunting for units with good structure but outdated interiors. In 2025 to 2026, Buy-to-Renovate isn't just a strategy. It's the most reliable path to instant equity and a high rental yield in Bangkok CBD.
Now, if you're the kind of investor who likes new buildings but hates pre-sale risk, this part is for you. The RTM strategy, also known as ready-to-move inventory. This is the hidden sweet spot of Bangkok real estate right now. Developers across the city, Noble, Sansiri, Ananda, AP, are sitting on mountains of completed units they couldn't sell during construction. And in 2025, 2026, they're under pressure. Cash flow, debt maturity, and weak pre-sale demand means they're clearing stock aggressively. What's that mean, aggressively? How about 15 to 25% discounts? How about waived transfer fees, free furnishings, even meter installations included? In some cases, RTM units end up cheaper than pre-sales in the same project. Let me give you one of the clearest examples. At Munich Sukhumvit 23, major development has been discounting their penthouse inventory by nearly 16 million baht. That's not a typo. 16 million off the original price, simply because they need to clear the books. And the beauty of RTM is this. You're buying something you can inspect, touch, walk through, and rent out immediately. No showrooms, no renderings, no waiting 3 years for handover, no construction delays. You see the actual view. You see the actual finishing. You see if the lobby looks like the brochure or if the developer quietly value engineered it down during construction. And you get instant cash flow. A pre-sale gives you zero rental income for years. A resale or RTM unit, you can list it the day after transfer. Developers are also absorbing multiple costs that individual sellers never would. Transfer fees, sinking funds, common area fees for the first year, furniture packages, parking allocations. All of these sweeten your acquisition cost even further.
And here's one more bonus. Many completed buildings still have foreign quarter available, something most hot pre-sales sell out instantly. RTM gives foreigners a second chance at owning freehold in high-demand buildings. So if you want new construction, but without the pre-sale eye tracks or waiting period, RTM is your lane. In the 2025-2026 cycle, these clearance deals are some of the best quiet opportunities in the market because you're getting new quality at resale economics and you're generating income from day one.
All right, let's wrap this up with the big picture view, the strategic takeaways that matter for investors in 2025 and 2026. First, price matters more than ever. When new launches are pushing 300,000 to 500,000 baht per square meter, and resale is still sitting around 140,000 baht, the value gap is too big to ignore. You're buying prime Bangkok real estate at a 50 to 70% discount to replacement cost. Second, yield wins this cycle. In a high-rate, high-cost environment, cash flow beats speculation. Resale condos are delivering 4 to 6% yields, and renovated units can push even higher. Pre-sales, they're stuck at 2 to 3%, and that's before you factor in vacancy. Third, time is a real cost. Pre-sales lock up your capital for 2 to 4 years with zero income and rising uncertainty. Meanwhile, resale and RTM units start producing rent the moment you collect the keys. Fourth, livability drives demand. Tenants don't want shoe boxes. They want 80 to 120 square meters, real kitchens, balconies, airflow, and rooms that actually close. Older buildings have this, no ones don't. That's why resale vacancy is falling while ultra-luxury vacancy rises. Fifth, renovation is pure alpha. You can buy at 80 to 100K per square meter, renovate at 30 to 50K, and still end up way below the cost of a new launch while offering far superior functionality. And sixth, RTM deals are the silent gold mine. If you want new, go for developer clearance units, discounted, inspected, rentable, and available right now. So, the strategic conclusion for this cycle is simple. Buy resale, renovate where it makes sense, use RTM to capture discounts, and focus on cash flow, not hype. In the Bangkok of 2025-2026, this is how you stay ahead of the market and ahead of the people still buying brochures instead of buildings.
And if you made it this far, you're already ahead of 90% of the Bangkok property market. If any of the insights or opportunities we talked about today caught your attention, or if you want help finding condos that actually make sense, just reach out to CondoDee. As always, all the contact details are right there at the top of your screen. And do me a favor, if you found value in this episode, hit the like button, subscribe, and turn on notifications. It helps more people discover what's really happening in Bangkok real estate. Now, for the next episode, I want to hear from you. Drop a comment below and tell me what topic you want me to cover next. Maybe you want the top buy-to-renovate buildings, or the best foreign freehold deals under 10 million, or the most undervalued riverside projects for 2025 and 2026. Whatever you want, just comment your idea and I'll pick the most requested one for the next podcast. Thanks for watching and see you in the next episode.